California's biggest home insurer says it's facing headwinds that could affect its customers. State Farm told insurance regulators that it could reduce the number of policies it issues in California by about a third in the coming years. That's according to the Chronicle. And earlier this month, State Farm asked the state to allow it to raise rates by as much as 30% to help regain financial stability. Joining us now to talk more about what all of this means for customers is insurance industry expert Carl Sussman. Carl, good to see you. So talk about what's driving this. Why is State Farm saying that it's likely to see its policy count go from just over 3 million here in California to just over 2 million within the next 5 years?
Well, Alex, it's not a big surprise to those of us that are watching this happen. We know that State Farm is having some financial difficulties, and right now they're in a position of having to make a decision based on today's regulations. And what they're doing is saying, look, if we have to choose between having X number of clients and maybe not enough money, we don't want to be in that position. We would rather have less clients and enough money to pay for those claims.
So we know last year, obviously we've talked about it, State Farm stopped issuing any new policies here in California. How much of this drop is driven by State Farm not renewing policies, or this projected drop, I guess I should say?
Well, it all goes together. They're projecting to drop about 1 million policies between now and the end of 2028, assuming that nothing else changes. And we are expecting some significant changes. So I think, if I have to take out my crystal ball, I think that because of the regulation changes we're going to see, I don't think we're actually going to see this number of non-renewals happening. But I think this is sort of that last-ditch effort that, you know what, we just have to plan for the way things are today. And as you accurately said at the beginning, this is what they're forecasting to do, but nothing is done until it's actually starts to happen.
Yeah, certainly. And so State Farm obviously planning to cut back on the number of policies it holds here, just as the insurer is asking the state for permission to raise its rates again by at least 30% for customers here. Is the projected decline in policies tied to that request? If that rate increase is approved by state regulators, does that mean that maybe they hold on to more policies?
It's possible. I think what's more likely to be a factor is the new regulations from the insurance commissioner on the sustainable insurance strategy. But there's no question that the rate increase is being sought after. And again, it's not unique to State Farm. Most carriers are looking to get rate adequate right now. And I think that, again, as time goes by and the rates start to work their way through the system, and the new regulations are available for other carriers to start coming into the market as well, it won't be as significant a hit for the policies they do non-renew, but I don't think we're going to be looking at numbers like this in reality.
All right, so and what do we think about the likelihood that the state is going to approve State Farm's rate increase request?
Well, I hope they do, because it's down to, do you want a carrier that's charging 30% more and can pay your claims, or do you want a carrier that doesn't charge more and the likelihood of them not paying their claims objectively is not so good? So I think that the insurance department is really stuck between a position of, I hate to say bad PR. It's bad PR to give that type of a large rate increase, but I think it's even worse to be in a position of leaving a company that is openly saying they will become insolvent if there's a large event without that rate increase.
All right, so we'll wait and see what state regulators decide to do. But as you just alluded to, Carl, coming up at the end of this year, the Department of Insurance, the state's Department of Insurance, is planning to implement these new regulations, what's called the Sustainable Insurance Strategy. And among other things, this would allow for insurers like State Farm to use these catastrophe models to better calculate the wildfire risk in certain areas. How are those reforms going to affect how State Farm issues insurance policies?
Well, if they're following the same path as most insurance companies, it's going to mean that they're going to be able to underwrite more. And when they underwrite, that means they're able to write business again. And on top of that, one of the main parts that is making State Farm concerned, it's not just their financial aspect, it's the fact that they have such a large footprint of market share in California. They are responsible for the lion's share of the California Fair Plan's exposure. We know how overbloated that organization is right now. So again, as the regulations roll out, people start leaving the Fair Plan, and that exposure on State Farm does not continue to grow and starts to shrink. Again, all of that's going to go into the mix for them deciding on what they have to non-renew and whether they're going to be taking new business or not.
And how long do you think it could take before we really start to sort of feel the effects of this new sustainable